Are you thinking of purchasing a home? Perhaps you're a first-time buyer or a homeowner that has stayed a long time in their home and finally have decided to upsize or downsize. Well, the process is much easier than you might think if you follow the right steps. So stay tuned. Hello, my name is Esther Carrasco. I am a bilingual full-time broker serving the Charlotte area and Lake Norman in North Carolina. I am delighted you're here because I am going to guide you through the steps of buying a home. This is going to be a two-part video, so that it's not too long. The first one is preparing yourself as a buyer, and the second part will deal with the offer and going under contract. Step number 1 out of 5 is to enlist the help of a real estate professional or a realtor. And you may say, what? I'm watching this YouTube video. Why do I need to hire a real estate agent? Well, this is just a primer. In this 10-minute video, I just want to give you information about what the process is going to be. You still need to work with a real estate professional because we do this every day for a living. We have faced pretty much all of the situations that you may be encountering while either building your new home or buying your resale. Therefore, even after watching this YouTube video, you still want to enlist that professional because you want to have the guidance of somebody that does it full time. This is not a hobby, and this is probably the most important financial decisions you're going to be taking in your lifetime, or one of the most important ones. So you really want to do it with the help of somebody that does it full time. And you will want to hire somebody that establishes a clear line of communication and transparency, and somebody that takes the time to answer every single one of your questions. Regardless of your price point, you want to feel that you are really a valued and important customer. The great news for you is that here in North Carolina, the commission for the buyer's agent is usually paid by the sellers. So you get representation at no cost. And representation is really very important because you want to ensure that somebody is working on your side, doing all the negotiating and all the research and all the paperwork involved in purchasing a home. When you sign a buyer agency agreement with an agent, it establishes a fiduciary duty to you from the agent, in which she has to obey all your lawful instructions, and she's going to exercise all due diligence and care in investigating the property of your interest before you put an offer and during the time of being under contract. She's going to disclose all the material facts that might influence whether you buy that particular house. She's going to be accountable for all the monies that are handled on your behalf. And she's going to keep the information about you, the client, confidential to all other parties, namely the sellers and their agent. So the conversations with your agent are going to include what are your wants and needs in a house, what type of community are you looking for, what type of house, how many bedrooms and bathrooms, and what is really important for you, what are your non-negotiable items, and what others are a little bit more flexible. What is your price point? How much do you think that you want to spend? And that leads us to step number 2. Talk to a lender and find out how much you can afford. In fact, I suggest that you talk to 2 or 3 lenders so that you can compare not only the best rates, but also the best level of service. Same as with a realtor, this is possibly not your day job, so you want to enlist the help of a lender that is going to take the time to explain all the ramifications about getting a loan. This is a significant amount of money that you're going to be paying back. The kind of fees that they charge for setting up the loan, etc., are pretty much standard across the industry. But what is not standard across the industry is the level of service and follow-up that they're going to establish with you. You want a lender that not only gives you the money to buy the house, but is actually going to ensure that they're taking the right steps to take you to closing. It is important that you select a lender that has a presence in the market or in the state where you are going to be buying. You might be concerned about the impact that this may have on your credit score. Well, do not worry, because when you are shopping around with lenders, these inquiries are going to show up in your credit history exactly as that, as inquiries. The important thing is that you do it within the same 30-day period. This is different from, for example, from applying for a new credit card or canceling a credit card that you no longer use, or even applying for a car loan. All those instances are going to adversely affect your credit score, whereas shopping around for a mortgage will not. During the time that you are applying for a loan, and once you get the loan pre-approval, it is really very important that you do not make any large purchases and that you do not open any new lines of credit. Pre-qualification versus pre-approval letter. These are two terms that sometimes people get confused, but they are in fact very different. When you're talking to a lender, they need to examine how much of a risk you are and how much are they willing to risk lending to you. So they're going to do a verification on your assets, etc. They are going to ask you some information, and they're going to provide you one of two documents. One is a pre-qualification letter, which is an estimation by the lender on how much they would give you based on information that you have provided, such as your credit score, your income, and your recurring debt. This, in a seller's market, doesn't really take you anywhere. The pre-approval letter proves that an underwriter has examined closely your credit score, a verification of your last 2 years of employment, a verification on the last 2 years of tax returns, a verification on all of your income and assets, as well as what kind of recurring debt do you have. And for those who maybe just come out of college or grad school, that time in college counts towards the on-the-job experience, as long as it is related to the field where you're working. Once you have that pre-approval letter in hand, you have really positioned yourself very well in the market as a strong buyer, because then you can present an offer to a house that you like. As a matter of fact, in strong sellers markets such as ours here right now in Charlotte, most of us, when we list a house for our clients, we advise them not to consider any offers that are not coming accompanied by either a pre-approval letter or a proof of funds if the buyer intends to pay with cash. Types of loans. Currently, the mortgage rates are the lowest they've been in the last 50 years, with interest rates at 3% or below. Of course, this will all depend on your individual financial history, and the higher your credit score is, the better rates you will get. That is why it is so important to plan ahead and to prepare yourself as a buyer and try to clean up your financial history as much as possible, or to try to boost your credit score as much as you can. The VA loans. If you are active military or you are a veteran and are in possession of a certificate of eligibility, these are great loans to have because they are guaranteed by the government and they require a 0% down payment. Other advantages to the VA loans is that the sellers may be required to do certain repairs to the house that are assessed as non-safe. A conventional loan usually requires a 3% down payment, And the minimum credit score is 580, although during this pandemic time, some lenders can establish that the credit score is higher than that. The FHA loans are also guaranteed by the government, and they require a 3.5% down payment. The minimum credit score is 620. The USDA is also a loan guaranteed by the government with a 0% down, but it is geared to low and moderate incomes that want to buy in rural areas. If you qualify, you may be able to take advantage of some down payment assistance programs, and there are mostly two types: the ones that help you with your closing cost, or the ones that give you money towards your down payment. Both of them are at 0% interest. How much of your own money do you need to buy a house? So in addition to the down payment that you may have to put towards the purchase of the house, there will be also closing costs, which may be anywhere between 1 and 3% of the purchase price. This closing cost will include the fees for setting up the loan, the fees for the mortgage insurance, and other deposits that the lender may require to keep in escrow as a guarantee that if you default on the payments, they can at least get back that. There will be a title insurance. There will be fees to the closing attorney that is going to help you with the closing transaction, as well as prorated property taxes, title search, deed preparation, deed recording, several and various administrative fees, etc., etc. Also, there are some other expenses that will be incurred outside of closing. It is very important that you do an investigation on the property as you are under contract, and this will come in the form of a home inspection, perhaps a survey of the land where it sits, a septic inspection if the house is not on city sewer, a pool inspection if it has one, etc., etc. We will see a lot more of this in detail in part 2 when we talk about being under contract. This concludes part 1, preparing yourself as a buyer. Stay tuned for part 2, the offer and going under contract. I hope this was useful, and if so, do me a favor, please give me a like.